The Jones Lang LaSalle Global Real Estate Transparency Index is a useful tool for evaluating the openness and accessibility of a country's commercial real estate market. The firm first published the index in 1999 and has been improving it and expanding it ever since. The 2012 edition shows that rising transparency is back on track after experiencing a hiatus during the global financial crisis. Rising transparency reduces the uncertainty for investors and occupiers for cross-border transactions. It also raises the efficiency of these transactions and levels the playing field for new entrants trying to understand unfamiliar markets. Rising transparency is also a sign that property rights are more secure and that the regulatory process for real estate is consistent and fairly administered. Rising transparency, however, does not eliminate market volatility, nor does it assure investors of higher risk-adjusted returns. It is a good guide to the depth of the capital markets and to the maturity of the commercial real estate sector in a given country. As commercial real estate markets mature, investors and occupiers generally have more choices about how and where to invest or to locate a corporate facility. For over 15 years, Jones Lang LaSalle has tracked the rise of transparency in the emerging markets. Now we're starting to track the frontier markets, which are earlier in the process of urbanization and infrastructure development. Many of these countries are still semi-transparent or opaque, but we also expect many of them to follow the same trajectory as the emerging countries as they begin to attract more foreign direct investment across many sectors, including land, infrastructure, and commercial real estate. Moreover, the emerging markets are no longer of interest purely as destinations for inbound investment. Outbound capital from Russia, Brazil, China, Korea, and Malaysia, that's all now part of the rising transparency story in these countries. This capital is finding its way to London, Paris, Sydney, Miami, New York, Toronto, and other international financial centers. Capital is attracted to highly transparent countries because of secure property rights and liquidity. But capital is also attracted to semi-transparent countries because of the opportunities for growth and the prospects of earning higher risk-adjusted returns. As transparency rises, the pricing gap between markets narrows. In investment terms, the yield spreads also narrow, and investors in semi-transparent markets can benefit from yield compression. The 2012 edition demonstrates the incredible diversity and heterogeneity of real estate markets around the world. At the same time, it also demonstrates that our knowledge and understanding of these markets is rising year by year.